Okay, so here is a puzzle. How does a company cross the $13 billion annual sales mark for the very first time, and Wall Street basically ignores it? Welcome to Earnings Unscripted. It is June 25th, 2026, and today we are unpacking Q4 for Darden Restaurants. That is ticker DRI, the parent company of Olive Garden and LongHorn Steakhouse. But Miro, this whole blowout quarter is actually a bit of an illusion, right?
It is literal calendar magic. Darden had a 53-week fiscal year, which means this fourth quarter got a rare 14th operating week. So, sure, top-line sales hit $3.71 billion, and the operating margin stepped up nicely to 13.9%. But a massive chunk of that growth is just having an extra 7 days to sell steaks and pasta.
Right. Okay, before we completely dismantle their victory lap, I have to do the legal thing. Just a quick reminder that everything on the show is our own personal opinion and not financial advice. So, wait, an extra operating week. Does that fully explain why the stock went totally chaotic this morning?
I think so, yeah. The stock action was genuinely bizarre. In the early pre-market, it swung violently. It dipped down around 204, rocketed up near 220, and then regular trading opens, and it just fades. It finished the day up a tiny fraction of a percent against the previous close, because once analysts unpacked the EPS of $3.51, which looks incredible being up over 30% from Q3, they realized that extra week just handed them 25 cents on a silver platter. The algorithms netted it out, and the enthusiasm vanished.
Right. So once you strip away the calendar weirdness, it is definitely less superhuman. But there are still real humans driving these numbers. And the LongHorn segment story here is, honestly, it is wild. Instead of running some expensive television ad campaign, they basically just put out a cryptic social media post teasing the return of lamb chops. Purely organic hype. And that actually helped drive a blistering 9.5% same-store sales leap.
Yeah, you can't really argue with the execution there. That's a massive return on practically zero marketing dollars. But, and this is the important part, it masks a pretty defensive trade-off happening on the other side of the company. Olive Garden is actively shrinking some portion sizes to get cheaper items on the menu.
Wait, smaller portions at Olive Garden? The endless breadstick people?
Exactly. Management actually admitted it created an 80 basis point drag on their check size. They're knowingly trading away check size to buy back weekend foot traffic.
That is a really telling indicator of how cautious the average consumer is getting. All right, let's get into the details.
The funniest detail in the filing is how that extra week actually punished their high-end stuff, because the 14-week anomaly shifted the whole timeline. It pulled Memorial Day right into the fourth quarter.
Okay, but Memorial Day is a massive weekend for restaurants. How does that punish them?
Not for Capital Grille or Ruth's Chris. Fine dining on a holiday weekend is dead. People are at the beach grilling burgers. They are not sitting in a dark mahogany room dropping $200 on a steak.
That is entirely true.
Right. So if you look at the fine dining segment, sales actually dropped roughly 7.7% quarter over quarter. The extra week literally dragged their margins down because it forced a historically low volume week into the reporting period.
Wow. So the calendar giveth and the calendar taketh away. It is really fascinating how one structural quirk can totally skew the perception of a segment. But outside of fine dining, the balance sheet looks wildly confident, right? They just announced a brand new $1.5 billion share repurchase program.
Confident is certainly one word for it. Aggressive is probably more accurate.
You do not like the buybacks.
I like buybacks when they're funded completely by free cash flow. But if you look under the hood, their short-term debt just exploded. It went from $290 million in Q3 up to almost $694 million in Q4. That is a 139% spike in 3 months.
Wait, so they're tapping short-term credit just to fund stock buybacks.
Well, money is fungible. It's not a direct one-to-one line. They did retire about $500 million in long-term debt, which is great, but they heavily tapped those short-term facilities. So they're basically swapping debt structures while simultaneously promising shareholders $1.5 billion in capital returns. And they're doing this right before they get hit with that massive beef inflation next quarter.
Cheeses. That is definitely a bold way to run the Treasury. But I suppose it aligns with management's overall personality right now. They're being extremely stubborn across the board, which I actually kind of respect.
You are thinking of the delivery app boycott.
Yes, absolutely. They absolutely refuse to integrate with DoorDash or Uber Eats. The CEO actually said on the call, quote, "If third party is ever going to be part of our business model, it must be sustainable for us in the long term. Our guidance does not help contemplate any third-party delivery." End quote.
Good for them. Seriously. Those apps essentially hostage negotiate your margins. They take a 20 to 30% cut, and then they own all your customer data.
Exactly. And Darden already has an off-premise mix sitting at around 27% just from their own internal pickup operations. So they have the scale to just sit there and say, no thanks, we don't need your volume if it wrecks our economics. They're demanding transparency and they want data control before they even consider it.
It's a pure control system. Darden wants to own the entire feedback loop. You almost never see that level of discipline in casual dining anymore. Intentionally ignoring a huge revenue channel just to protect your pricing power.
It's a great stance, but a rigid strategy like that really only works if people keep walking through the front door on their own, which makes me wonder how they're setting up the rest of the year because those inflation warnings for early fiscal 2027 sound a little scary.
They actually gave us exactly how scary it is going to be. Management is forecasting total inflation around 3% for the year, but the pain is completely front-loaded. The CFO essentially warned everyone that Q1 earnings growth is going to drop down to the low to mid-single digits.
Just because of beef prices? I mean, I know commodity markets are rough right now, but that is a sharp drop.
Mostly beef, yes, but the real outlook story is how they are reacting to it. They said they expect their own menu pricing to stay around 3%, maybe even lower at Olive Garden, which is explicitly pricing below inflation. So they are deliberately choosing to eat the cost difference.
Okay, yeah, that is a massive tell. They are obsessively defending their value proposition. I guess that links right back to the Olive Garden portion strategy we brought up earlier. Take the short-term hit on margins just to make sure the parking lot stays full.
Right. And you do not make a defensive move like that unless you're cleaning house elsewhere. They are permanently sunsetting the Bahama Breeze brand. They are just closing about 14 locations outright and converting the rest over the next year.
Oh, wow.
Yeah, it is ruthless portfolio management. Toss the dead weight so you can focus entirely on shielding the core moneymakers during a tough quarter.
The great casual dining consolidation. But honestly, it feels like the smartest long game right now. Strip away the distractions, lock in the guest loyalty, and absolutely do not punish the customer for macro inflation.
Assuming the lamb chops keep going viral, sure. If traffic stalls, well, that short-term debt pile is waiting.
There's always a catch with you. All right. I think that's the full story on Darden's weird, wild 14th week. Thanks for exploring the numbers with us, and we'll catch you after the next earnings call. If you want these earnings episodes to just magically appear in your feed, hitting that follow button is the easiest way to make it happen. As a quick aside, this entire show is an experiment in human-guided AI. Using generative models to speed read those massive financial filings so we can focus on the actual story. We would love your feedback. So feel free to toss a ticker request our way at earningsunscripted@datamadness.ca or just grab the X link down in the show notes.
See you next time.